Dear viewers, welcome back to my channel. In this video, a problem is solved on computation of income from other sources. Kindly watch the video till then, like it, share. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is an example of computation of income from other sources. The question is very simple here. The question runs like this. Mr. Prakash, let me stretch this one here. Mr. Prakash submits the following particulars. Of his incomes for the previous year 2019-20. The details are: family pension received from Government of Karnataka, rupees 30,000. Royalty received from the publisher, rupees 50,000. He spent rupees 5,000 on books, stationery, typing, etc. during the year. Winnings from lotteries, rupees 56,000. Winnings from horse race, here this is net here. Horse race, net rupees 27,000. Then interest on 10% tax-free debentures of Mysore Electrical Company, in the bracket listed, rupees 7,200. Then next one here, interest on 10% tax-free commercial bonds, rupees 9,000. Dividend received, rupees 8,000 from foreign company, rupees 11,000, 10% Karnataka state government loan, rupees 36,000, 10% tax-free commercial securities in the bracket listed rupees 3,186 received as interest on securities of textile company listed amounting to rupees 3,000 amounting to rupees 3,600. Compute the income from other sources of Mr. Prakash for the assessment year 2020-21. So solution here, computation of income from other sources, name of the assessee Mr. Prakash, previous year 2019-20, whereas the assessment year 2021. So now first let's discuss here family. This is pension, family pension received. So rupees 30,000 is given, so 1/3 of the pension or rupees 15,000, whichever is less. Then royalty received from publisher is taxable, and the expenses relating to royalty, they are deductible here. Winnings from lottery, net we have given, we have to gross up here. Winnings from horse race, again net is given, we need to gross up. Interest on taxable debentures, they are given as rupees 7,200, which is to be grossed up. Interest on 10% tax free commercial bonds, rupees 9,000 given, which is to be grossed up here. Dividend received rupees 8,000 from foreign company, taxable. 11,000 10% Karnataka state government loan, interest on Karnataka state government loan is taxable. Then interest on tax free commercial securities is to be grossed up. Then interest on securities of textile company limited is to be grossed up. This is 1 minute. There is securities of, this is paper mill. Okay, there's one more change here, one more I need to add here. Rupees 3,186 received as interest of securities of a paper mill company, in the bracket not listed. Then we have got one more, rupees 3,186 received as interest on securities of textile company amounting to rupees 3,600. Then dividend is taxable here, so this all this interest, it is to be this is received interest. Okay, received interest. Okay, so all these things have to be crossed up here. So now let us go for computing the total income here. Let me insert a 3 column here. So particulars, this is a simple problem, so which tests the whether the students have learned grossing up or not, that's all. So family pension received, family pension received, which is given as rupees 30,000 here. So 30,000 less exempted under section 57 subclass 2A, 1/3 of pension of rupees 30,000 equals to rupees 10,000 or maximum of rupees 15,000, whichever is less. So that comes to rupees 10,000 here. So 20,000 is chargeable to tax. Then the next one here, royalty received from a publisher, which is given as rupees 50,000. Then the next one here, winnings from lotteries. So gross income equals to net income multiplied by 100. So the rate of TDS here is 30% on casual incomes. So divided by 100 minus 30, that's we are going to get rupees 70. So now let's substitute the values in this formula. So the net income received by him is given as rupees 56,000. So 56,000 multiplied by 100. So let us divide this here by underlining. We get here again 70, which is mentioned in the formula. So 7 ones are 7 eights are. So 80,000 is the winnings from lotteries. 80,000. Then the next one we should go, winnings from horse race. Gross income equal to net income multiplied by 100. So the rate of TDS on all casual incomes, it is 30% only. So divided by 100 minus 30, we are going to arrive here at 70. Then let us substitute the values in this formula. So it is given as rupees 27,000. So multiplied by 100. So let us divide this here by underlining. Again, it is mentioned in the formula as a 70. Sorry, it is 27. So sorry, this is 28. It should be actually. So 28. Slight correction here. 28 divided by 70 here. So 7 and 4, so 40,000. We are going to have this as a 40,000 here. So 40,000. Then the next one comes here, interest on tax-free debentures of Mysore Electrical Company. So we have given here interest on Mysore as 7,200. So gross interest equals to net interest multiplied by 100. So let us divide the same thing here by the rate of TDS here is 10%. So 100 minus 10, we are going to get here 90. Then let us substitute the values in the formula. So rupees 7,200 multiplied by 100. So let's divide this here by underlining here. Again it is 90 only. So 90. So 9 ones are 9 eights are. So that's we are going to have here 8,000. So 8,000. Then the next one here we have got interest on tax-free commercial securities. That is again we need to gross up here as it is tax-free. So which is given as 9,000 here. So gross interest equal to net interest multiplied by 100. So the rate of TDS remains same here, that is 10%. So 100 minus 10, that comes to 90 here. So let's substitute the values in this formula so that we get net interest is given as rupees 9,000. Yeah, I think it is given as 9,000. So 9,000 multiplied by 100, which is divided by underlining here. So it is 90 only. So the interest here it is 10,000. Then the next one comes here, dividend from foreign company, which is taxable here, that is given as in the problem rupees 8,000. Then the next one comes here, interest on Karnataka state government loan, so which is given as 10% of rupees 11,000, which comes to rupees 1,100. So 1,100, just let me do the alignment here. So 1,100. Then the next one comes here, interest on tax-free commercial securities. So gross interest equals to net interest multiplied by 100. So the rate of TDS again it remains same, that is 10% only. So 100 minus 10, that comes to 90 here. So 90. So here now let us check out how much it is, 36,000. So first we should calculate the interest here. So interest equals to 10% of rupees 36,000, which equals to rupees 3,600 multiplied by 100. So let's divide this here by underlining. So here we will get so it is 90. So 90, so which comes to 4,000 here. So 4,000. So 4,000. Then we should calculate the interest on interest on securities of a paper mill company. So gross interest equal to net interest multiplied by 100. So let us divide this here. So again the rate of TDS remains same, 10%. So 100 minus 10, you will get a 90 here. So 90. So now let us substitute. So it is 3,186 multiplied by 100. So let us divide this here. So divided by. So the rate of TDS, it is as mentioned, the formula, it is 90 here. So 3,186 multiplied by 100 divided by 90. So it comes to 3,540. So 3,540. Then we have got interest on, the last one, interest on securities of textile company. So this is also to be grossed up because it is less tax here. Gross interest equals to net interest multiplied by 100. So let us divide here. The rate of TDS, again it is 10%. So 100 minus 10, that comes to 90 here. 90. So let us substitute the values in this formula. So the interest, the last one, it is given as 3,600. So rupees 3,600 multiplied by 100. So let us divide here by underlining. So as it is mentioned in the problem, it is net income will be 90, assuming 100 per rupees is the interest. So 90. So we will get 4,000. So 4,000. Then the next one here, gross income will be. So now we need to make the sum of this here. So the sum of all these comes to 2,28,640. Then from this, let's deduct less deduction under section 57. We have got expenses on royalty. So they are spent on total amount here is rupees 5,000. It is 5,000. So 5,000, let us subtract this 5,000. So only one, I think, there is no other expenses here. So 5,000. The difference here is income from other sources. So it will be 2,23,640. I think there are no notes to be required here. So this is the answer of this question, 2,23,640. So this problem is asked to test whether the students have understood the concept of the grossing up or not here. So this is a very simple question here. So it's a very simple question. So the answer here it comes to it, which is made in the board here, 2,23,640. Thank you.